Good day to all Inderes TV listeners and viewers. Enento publishes Q1 results today, and on this video we have CEO Jeanette Jäger as guest. Welcome.
Thank you very much.
So we could start the video as usual by going through the highlights, the challenges and the highlights of Enento's Q1.
Yep. I would say that when it comes to the highlights, I think we have several highlights. The first one to mention is, of course, now that we are seeing the modest but still growth in our Q1, which is the first time in 2 years, very much due to the very muted consumer credit volumes earlier. I would say another highlight is that we continue to see very good growth in our business insight, where we are above 5% in Finland and double digit also continuously in Norway, Denmark. We have good traction in our infrastructure project. We are now almost through the transition in Finland, and we are also planning now to close the full transition, including Sweden, in H1. And last but not least, we also have good traction both when it comes to developing new services and take them to market. So we see good growth in several of our new areas, which we have been seen as our growth areas ever since we put the strategy into the paper in 23. So those are the highlights, I would say. When it comes to challenges, I think that most of the challenges we are facing right now is the one that are not really within our control. I would say that one of the challenges is, of course, how do the regulation continue to affect consumer credit? And then secondly, of course, we now also see the geopolitical situation in the world changing again, and that can have an effect on both customer confidence when it comes to if they want to continue to invest, take credits, etc. And that is both for consumers and for business.
You mentioned that your revenue returned to growth after 2 years. So is this a trend that you're expecting to continue and the decline has now stopped if everything remains the same? Is the hardest behind now?
I would say that it is good to keep a stable focus on seeing how this regulation is coming into place, which we now see are impacting in Sweden, the consumer credit market. And I also think we should be a little bit cautious about how the world is changing at the moment. But I believe that we have at least a good stability, and we are also prepared to handle if we also see changes would be negative. We have seen that before on how we have been able to handle cost efficiency and cost control, and we are ready to do that depending on how the world develops.
The adjusted profitability looked rather good, and it was above our expectations at least. But then the one-off costs were higher than we expected, then the reported earnings were a bit lower. So you have previously mentioned that these one-off costs should reduce in H2. Is this view still valid?
That is still valid. The one-off costs are very much connected to our infrastructure consolidation project, and we are, as also mentioned, now planning to close that in H1. So in that sense, then we have a H2 is differently.
The new regulation preventing over-indebtedness in Sweden came into effect in March. So what kind of impact have you seen at this stage, and has it been according to your previous estimates?
I would say that it has affected in the way that we have actually thought it would be, that we would continue to see a muted market. And that is exactly what has happened. We haven't seen that we have seen any change going back to any kind of earlier normal, but rather continuously muted. And that also means that these changes has already started to take place also in how the consumer credit market is developing. So as expected, I would say.
All right. Then about the transformation of the premium business in Sweden. So could you maybe first talk about in practical terms what exactly is being transformed here?
Yeah. if I may start with saying why are we doing that?
Yeah.
I would like to underline that this is very much about the modernization of the customer journey for our small and medium customers in Sweden, meaning that it's possible for them to buy digitally and also that it's possible for them to buy a service and buy it on a continuous basis, meaning that we are reducing our dependency on physical sales. And it also means that we believe that both the customer journey will be better, but we also believe that we will have a better sales efficiency and better margins. What that means, what we are doing, is that we are both equipping ourselves technically with this. It is connected to our CRM systems, it's connected to our production systems, and a lot of investment and work with that has already been done. What we also need to do is to now make sure that our evergreen products, which we call it, instead of being one-off evergreen, that is also now technically possible. It might also be that we look into if some products will be combined, and also even that some products would be closed. But all in all, what I find is also very important, in addition to the margin improvement that we are expecting this to see in the mid to long term, is actually also that we are very much modernizing and making the customer journey easy for the small and medium customers.
All right. You discussed a little bit about the margin profile, so maybe could you talk about more about the financial impacts this is having? So maybe also the short term and the long term.
Yeah.
Also in revenues and margins.
We haven't said anything about exact numbers yet. I mean, it is a fairly large amount of customers that are affected. It's 28,000 customers. And when it comes to revenue-wise, let's say it's more than 10 million euro. We do see, of course, and I think that is, fair to see that there are some top-line risks in the short term. We are doing everything we can with activities to mitigate that, and then mid to long term, we do see that we do have margin improvements in this area, which will be, nicely contributing.
Then let's talk about the outlook. The trade war obviously has been a lot in the news recently. So have you seen at this stage any effects yet in your customer base, or what type of scenarios are you now preparing for in Finnish and Sweden?
Yeah. Well, to start with, we don't have any direct impact. We don't have any US-based operations.
Yeah.
But then indirectly, of course, I think we, as everyone else, we are now closely following how is this actually now impacting the economy for all of us. If we see that we will have increased and continuous uncertainty, that is usually never good for services and for growth. And that is something we need to keep a close eye on.
All right. We could end the interview if you could review the focus areas for Enento for the rest of the year.
The rest of the year, we say that we focus on three things. The first thing is that we keep and retain our strong position. We have a nice and strong position when it comes to our core, very much about the credit area and closely connected services, as well as our brands, UC in Sweden and Asiakastieto in Finland. And therefore, we also have a very good position with the Proff in Norway. And I would say that all of us are very much connected to quality. So to retain and keep that position, that is the foundation for any further success. Then secondly, we are, of course, continuously now following how will the market develop, connected to what we just discussed, and see if there is any additional need for activities. We have proved also earlier that we are able to adapt to the market and how it develops. Cost efficiency will be continuously important to strengthen our margin, and also cost control. The third area for us is the growth and the growth areas. We have invested in several new areas. We have good traction in these areas, which I'm really happy to say. And of course, now we are putting even more focus in commercialization and getting these services out to our customers. And I would say that all in all balances us in a way that we are keep going for growth in new areas, but we need to keep our core intact, and we also need to adapt in cost efficiency and cost control in order both to provide a good margin, but of course also to be ready depending on how this year develops.
All right. Thank you for the interview, Jeanette.
Thank you very much.